Hello everybody and welcome to the weekend briefing. So we're going to take a look and see what's going on in the markets, what happened last week, what we expect to happen this coming week, what we got for earnings reports, what we got for economic reports. Looks like it's going to be another busy week. But first, as always, let's just take a quick look at our disclaimer. Everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All statements made here are my own personal opinions, and all trading and investment decisions are your own and done at your own risk. All right, we got that out of the way, so let's get into this. So, coming up this week, all week long, we've got lots of Fed heads speaking. There are various events. So there will be some volatility because of some of the things that they say, but they're usually pretty good about sticking with the program. Not really much going on Monday other than some really minor Fed speak. On Tuesday, Fed's Mester, she's speaking about monetary policy and financial stability challenges in a panel discussion. I think that one's going to be fairly important. I think that'll be fairly closely watched. So in the daily briefing, I'll highlight this. I think it happens at 3 in the afternoon, but that will definitely be in the daily briefing for Tuesday. Wednesday, the big one, we've got CPI, Consumer Price Index, also known as inflation. Obviously, this will be very closely watched. This has the potential to change everything, and one day it will change everything. One day the CPI number is going to come in and show that inflation is rolling over. And when that happens, and especially if it's a fairly big change, when that happens, this market is going to rally like crazy. We will have the mother of all bear market rallies. So definitely something to watch for. I don't think there's no big fireworks expected this time around. I think we're expecting actually maybe even a very small pullback in the CPI number, but there will be areas within CPI that are still going up. So we'll have to flip a coin or watch it. It's too binary event for me to trade ahead of time anyway. Going into it, I'm not smart enough to know which way it's going to come out, but I may play the reaction to it. On Thursday, we have Producer Price Index, another inflation number, and this is sometimes thought of as a leading indicator because it's producers. What does inflation look like from a producer, from the producer aspect? On Friday, we have the preliminary U of M, I think it's University of Michigan, Consumer Sentiment Index, and also consumer inflation expectations. More inflation data. Are we seeing a theme for this week? This week is pretty much going to be all about inflation and, of course, the Fed's reaction to it, right? So we get a lot of actual hard inflation data. We get a lot of, Fed members, FOMC members speaking about inflation and how they're going to deal with it. So big inflation week. So we should expect lots of volatility. We still got lots of earnings on the go. It's starting to mellow out a little bit. Most of the big names have reported, but there's still some important names. I've highlighted, some of the names that I think are going to be really closely watched. On Monday, before the open, we have Palantir. After the close on Monday, Upstart. I know that a number of us in the Discord will be watching that. AMC, maybe. I don't know. Do people care about AMC anymore? I know in the Discord, people would be watching out for Tattooed Chefs, so that's all Monday after the close. On Tuesday before the open, Peloton will no doubt be very closely watched. Norwegian Cruise Lines. This has been falling quite a bit lately, but give us a sense to sort of how the COVID recovery, trade is, or the back to normal trade is going. Workhorse, I'm not sure if people care about that one anymore. Village Farms was always one of my favorite pot stocks. Of course, pot sucks right now, but could be an indication. Are we going to start seeing a bottom in the pot stocks soon? So yeah, it might be worth a look, this Village Farms on Tuesday morning. After the close, SoFi, I know lots of people in the Discord be watching that one. Roblox, another really popular stock. Occidental Petroleum, give us some ideas in the energy sector, and I'll actually show you some energy trades a little later on, because they're still working well. The trade desk, a big disappointment, but we'll see. Maybe they can turn it around here with their earnings. Coinbase might be of interest to some people. Not anything terribly interesting to me on Wednesday before the open, but after the close we have Disney, Rivian, Dutch Brothers, the Starbucks competitor, Beyond Meat will probably be fairly closely watched. Thursday morning before the open, don't really see anything there that's terribly interesting. After the close, we've got a firm, maybe a couple others that people might like, and then Friday, really not much of anything going on. So that pretty much covers sort of big events for the week. We'll take a look now at some charts of the major indices, some commodities, sectors. We'll see if there's any nice setups along the way. So we'll start out with the S&P 500. If I can, sorry. Okay. Yeah, I have trouble finding some of these tabs because I've kind of got a different setup for when I'm doing this recording than when I'm actually trading. Things are at a different spot. All right, so this is the S&P 500. Now, actually, let's take a look at a weekly of this because, if we look at a weekly candle on this and we zoom right in, we might look at this weekly candle and go, look, here's our close from the week before, and look, we opened and closed in the same place. Not much happened, right? Pretty boring week. That's what you might see if you look at that weekly candle. But we all know better, right? This past week was anything but boring. Here's our close from Friday, and we had a very volatile day on Monday, but a good day. This looked like a great reversal day, and it's like, all right, let's go, let's rally on, let's go up from here. And sure enough, we did. We had a couple more up days, a really big up day on Wednesday. Came into the top of this range though, and that declining 21-day moving average. And on Thursday, gap down and just went down all day. The selling was relentless. It wasn't panicky, but it was just relentless. Little bit of bounce at the end of the day. And this came in very late in the day on Friday, or Thursday, sorry. And then Friday, another very indecisive day. You can't even really see. There's a doji in there hiding here. Why don't I just move this line out of the way a little bit? There we go. Now you can see that little doji, right? So an indecisive candle here is somewhat bullish, because we went down, we came down to this pivot here, and we popped back up and closed in around here. So you can see some bullish action in that. It was indecisive. It certainly didn't close on the lows. Does that mean we go up on Monday? I don't know. Take your pick. We're just up and down, almost on a daily basis with great big moves. So I think we should expect more of that. Let's see. What do we got? The Qs. So the Qs were similar. The close wasn't as good in the Qs, but still, not bad. We're kind of at that, at this pair of lows here is essentially where we closed, but we did put in a lower low. And if we break down, it seems like a lot of people are talking about this 300 level. Everybody's expecting a bounce there. I get afraid when everybody's expecting the same thing. So either maybe we don't go to 300, or maybe we come to 300 and we just sail right on through it. But if everybody's expecting to see a bounce here, maybe we'll have a little bounce and then roll over and come back down. Although that's not what I want to see, but I think all these people who expect a bounce are going to be, the market will want to teach them a lesson. And I'm going to go back to the SPY just for one sec, because we should zoom out a little bit on that and take a look. What happens if we break down? What happens if we break down below this 405 pivot? Well, we've got this little gap here from back a year ago. And, so I mean, it seems kind of a no-brainer. We fill the gap, and then maybe 400 supports. I kind of don't think so. I think our next real support is probably down here in around 380. And at the moment, there's really no reason to believe we don't come down here. I think the bear market continues, unfortunately. IWM, Russell 2000 small caps. Here, if you need reasons to be bearish, here's a good reason to be bearish. I mean, this thing just keeps going down. We come down, we consolidate, we come down some more, we consolidate, we come down some more. So, looks to keep moving down. The 170 area may support. Maybe it needs to go to the bottom of the gap, which is around 165. But this as well looks like we're coming down to test levels below where we are. The IWC, this one is the Russell microcaps. Kind of looks the same as the small caps. Looks like this needs to go and test something lower. But support on this one is way down. Maybe at 100 because this is psychological level. More likely it's about 95 on that. Volatility index saw a couple spikes up recently. It did this spike up on Friday though. This did fail and pull back, so that's good to see. If you need something bullish, you could look to that. But we're still up really high. Where did we close at? 30. Oh, that's not bad actually. We pulled back quite a bit from this more recent high of around 37. So. Yeah, ever so slightly bullish action on the VIX. The 10-year yield, this had been building a base. We'll zoom in a little bit here. This had been building a base and then broke out of that base this week and looks to continue. This is continuing its way up. So yields going up, bonds still getting sold. If we look at any of the bonds like, or bond indices like TLT, for instance, they all look like they're just falling off a cliff. These things are just broken. And I hear people talking about, you hear hedge funds and whatnot talking about how their models are broken. I mean, you just can't have this sort of decline without breaking models. This is totally unexpected. And this is what, they're just selling bonds like crazy. They do not want to have anything to do with bonds. Okay, we should look at some commodities. Before we do that, let's look at the U.S. dollar index. I brought this up. Whoops. We'll move over to Trading View here. There we go. I brought this up last week, how we would come into this major high here, and this high goes back to 2016. We've got this 2016 high here, and we got up near it during COVID, near the COVID low actually, in 2020, and we're coming into it again. We have been coming into it and stalling out there. Every time it comes through, it just can't get through there, right? And I want you to look, because we've now got, and I mentioned last week that it seems like, we are due for a pullback in this dollar index. And we had that during the week, bit of a pullback. It tried to go up again, but still failed to get through. But notice this RSI divergence, and this is quite the RSI divergence, because we had topped out in around here at around 80 on that leg up right there, and now we're below 70. So this is interesting. This does suggest that this rolls over and starts coming back. And if that rolled over and started coming back, that would probably actually be good for equities, but it would also be really good for commodities. So let's go over to FinViz really quickly and just look at some performance of the commodities for the past week. So this is our 1 week performance in a variety of commodities, but you can see that these commodities are the best performers dominated by energy commodities, right? Gasoline, natural gas, crude oil, Brent, that's Brent crude. Crude oil WTI West Texas Intermediate, that's US crude. We've got some agricultural commodities, wheat and cattle doing quite well, more energy. And then it just, you know, kind of turns into a mixed bag, and then we look at the low side, we've got some, you know, palladium, lumber, coffee, so a bit of a mixed bag down here. Copper is, you know, down near the bottom. You know, silver is down there too. So we're kind of, you know, mixed up, and that's sort of what we expect to see when the dollar index is chopping around like that. But if we take a look at a monthly, you know, monthly view, again, we see the energy complex up near the top, and sort of a mixed bag down at the bottom. So let's go back to our charts, and we want to take a look at, we'll start with gold. And gold is just kind of a choppy mess. This looks like this just wants to continue chopping around for a while, so not much to see there. Silver, very similar, although it is coming into this, you know, it's spent most of the week actually near this major support level. If this breaks down from here, watch out for gold as well. Will probably break down, and probably some of the other metals. And this has got, you know, I mean, if silver breaks down, it could go, it could make quite a big move, probably down into the $19 to $18 area. So we want to keep a close eye on this level here in silver, but I suspect that this is going to either just continue to chop around or maybe bounce up a little bit from here. But I doubt that this is going to move enough to the upside that we'd want to be interested in that. The gold miners are telling us that, if they'll come up, thank you. These are telling us that gold probably rolls over. This doesn't look great here. I think the gold miners continue lower. Copper has not been doing terribly well. This is another one where, you know, it could break down from this fairly important level here for another leg lower, or, you know, perhaps this turns up from here, but I'm not terribly hopeful on that right now unless the dollar actually rolls over. And this sort of malaise in copper has really affected some of the copper miners, especially Freeport. This broke down from an important level on Friday, and it looks now, so we had a bear flag here that we were looking at last weekend, and the target now on that bear flag is in around this $31 area. So that's quite a move. I mean, if this bear flag is going to fulfill its prophecy, you know, this is a big move. There's lots more downside left in this. I'm not playing that to the short side. However, you know, you can see we did mark this out last week where your entries to the short side might be on this. So if you did take that short, I mean, good on you. It looks like there's more downside to come. TECK, on the other hand, now TECK is not one of the biggest copper miners, but they do a fair bit of copper mining. It's hanging in. You know, it is still well above its uptrend. It is a little choppy in here, but then, you know, this does look like it could turn up from here. Anytime it's gone below this 37 area, you know, you can see it spent 2 days below there, but it popped up out of there really quickly. So if I was going to, you know, be in any of the metals miners, it would probably be TECK. Uranium is kind of messy. Still in this, you know, drawing a base here, or you could call this a bear flag. This is the Sprott Uranium Trust. This is the one that, you know, this is the one that kicked off, the Uranium Trust is the one that kicked off the whole uranium rally. URA, so this is the ETF of uranium miners. This doesn't look as pretty. And we've got this weird kind of, some people might call that a megaphone or broadening pattern here. This is usually kind of bearish. Cameco, the big uranium miner, you know, it continued to break down, but it did bounce off that 200-day moving average. Drew a little bit of a hammer, so maybe this is trying to, you know, stage a bit of a recovery here. Hard to say. This is kind of hands off to me, though. DBC, sort of a more general commodity ETF. So this is the ETF of the commodity futures. This doesn't look too bad, still in the uptrend. But, you know, is it starting to look a little toppy here? And, you know, off of this pivot? And, you know, I think it is a little bit. So this has definitely got to break out to the upside of this soon. And if this does, you know, I like to see a consolidation near highs before getting into something. So this could be a good setup because if it does break out to the upside, there could be quite a move in that. Of course, we want to be careful that we don't buy into a failed breakout, because if the breakout does fail, a downside move could be quite fast. So if you do play a breakout here, make sure your stop is tight and you respect your stop, because you don't want to get caught in a fast move to the downside in this thing. The agricultural commodities ETF. This is really starting to look like it's rolling over. So we don't want to be playing, you know, if we're in this on the long side, we want to be really careful. I think a break below this line, looking like it's ready to break down. You know, I mean, we had to move down. We tried to build a base, couldn't break out the upside of the base, and are now sort of basically building a lower base below that, right at a support level, an important support level. So this looks like it could break down fairly soon. If we look at corn, looks very similar to that ETF that I just showed you, and it looks like it's rolling over. Soybeans, very similar look, are being supported by their 50-day moving average. And the wheat ETF, I can't remember the news on wheat. There was news on wheat this week, and this does look like it's trying to move back into this wedge and move back to the upside. So this might be worth keeping an eye on. Okay, before we look at some of these sectors, let's go back over to FinViz. And we can look at the performance of our equity sectors. You can see at the top here, we're looking at the performance over the last week. And energy vastly outperformed everything else. Interestingly, utilities outperformed as well. And in a week where the other defensive sectors like, you know, consumer staples, real estate, and healthcare were all down, utilities were up. So that's kind of fascinating, actually. It's a little disconnected from its other defensive sectors. And strangely, communications services, which is a sector that have been doing horribly lately. I mean, you can see, look at the 1 month here, communications services, right? It was the worst performer on a monthly basis. That was slightly green this past week. And everything else, consumer cyclicals, that's our consumer discretionary, it did quite poorly this week. And we'll look at some charts of all of these in a bit. But I guess not a lot of change other than this communication services moving up is odd. So that might be worth keeping an eye on. So let's go to our let's go back over to our charts of these. So we can see this is the energy sector ETF. This is doing really well. This is broken out, you know, above a minor resistance. It's broken out to new highs. This looks great. You know, I've been saying that energy is a great place to be, right? Crude oil isn't as strong as XLE, but you know, looking at XLE and looking at some of the oil companies, which we'll do in a sec, this is telling us crude oil is probably going higher. XOP is the ETF that covers oil producers, oil exploration and production. And we can see this is, you know, continuing to move up in this little channel. We'll just extend that channel we've drawn. Can't really break out the top of this channel though. So, you know, we were looking at this as potentially a bear flag. It's spending too much time here for it to really be a bear flag now. it's just a nice upward channel now. No reason to think this won't continue higher and break out to new highs. So that's your oil companies, the producers, the exploration companies. We'll look at the oil services ETF, and it's looking kind of similar. It's probably got a little bit more resistance overhead, but I'm not terribly bearish on this either. In fact, I'm actually kind of bullish on this, but I'd rather play the oil companies if I'm going to be in that space. So oil companies like Occidental Petroleum, for instance. This broke out to a new high on Friday. I think word came out this week that Buffett is continuing to buy into this company and add to his position. So this looks like it will continue out to new highs. ExxonMobil is a nice little setup here, I think. You can see it has stalled out this week right at this pivot at this previous high. But a breakout from here, I think, could be quite strong. So if you're wanting to play in this space, ExxonMobil looks like a good place to be. But again, you got to be careful of these failed breakouts. So if you're gonna buy a breakout here, you probably want to have your stop maybe below Friday's low or perhaps below Thursday's low, and you want to make sure you respect that stop. Coal, Arch Resources, still up near highs, maybe building a little base here for another leg higher perhaps. Could be worth watching for a breakout. Coal has run so much though, it's kind of a tough one to buy into when it's way up here, but it's been doing really well. Consol Energy is another coal company. It has broken out. A little bit of an indecisive candle there on Friday. But again, if you're looking, if you're interested in the coal space, this does look like it's going to continue higher. But, the higher this goes, the riskier it gets. Metals and mining, messy, not much going on here. This is kind of breaking down a little bit. So that's probably not the space we want to be. I think one of the reasons that the metal sector is not doing very well right now is because of these China lockdowns. And I think when they start opening back up, when these lockdowns ease, we'll see our metals and mining companies, our copper companies, Freeport-McMoRan and TECK, this ETF, maybe even gold and silver start to climb again. But for now, as long as China's locked down, I think we've got trouble in the metals and mining space. Industrials, not much to see here, just kind of messy. Maybe it's putting in a bit of a bottom. You can see, some people might call this a triple bottom, certainly a double bottom, but it's not confirmed yet, and it could easily break down from here. And if it does break down, there is a fair bit of dead air for it to come down to like 88 or so. What's next? Oh, consumer discretionary, messy, breaking down. And this one also has a lot of dead air. There's a lot of room down here into probably this pivot right here, in around 142ish. And you can see that broke down on Thursday and then continued lower on Friday. Did have a bounce, so there is reason to be hopeful on your consumer discretionary stocks, but it's looking pretty sketchy to me. Retail, part of the consumer discretionary space, it has broken down. We were looking at this pennant here, this triangle, broke out of there. It came up, it tested the breakdown point and broke down some more. And again, there's a lot of room for this to fall, probably into this area from back here in around 60. Costco, one of the darlings. It has really broken down lately. Came down and is now testing some support. The 200-day moving average. It broke through the 200-day moving average on Friday and closed below it. This is starting to look a little scary here for Costco. And your other companies like it, I'm sure that Walmart probably looks the same. I know that Amazon looks okay. So Walmart's not as bad. It hasn't fallen as much. Does seem to have maybe found support at the 50-day moving average. But I mean, if the whole space continues to decline like it has been, Walmart will decline as well. Probably come down and test the 200-day moving average down here. Financials, nothing to see here. Other than breaking down through important levels, which is not good, not healthy for the market. Materials, a little bit messy, choppy, kind of hanging in. And one of our favorite material stock is Nutrien. That's got has formed a. We were looking at this as a potential bull flag, but it is kind of forming that upwards channel like we're seeing in the energy space, right? So I'm not really too bearish on this. I think this does continue higher, but we definitely want to watch for a breakdown of this channel if we're long on this one. TECK, ugly, but looks like it's trying to bottom here, or at least the support is trying to hold here. But this could easily fall apart. And if it does fall apart, we've got to watch out for the 135 level, maybe the 130. There's definitely room for this to move down. Semiconductors. Semiconductors didn't actually have a terrible week. It looks like they're trying to find support here. We could draw a little sort of upward sloping line on this. If we're above this line, we're all right. We start breaking down below this, and especially below this pivot or this support level here at 222, then things could get ugly into that space. Communications. So, the communications sector seemed to perform fairly well. You wouldn't really know that from looking at this chart. But I mean, I guess this just tells us that some of the other sectors had a bad week. So again, right at an important level, this kind of needs to hold. Will it? I don't know. Flip a coin. If it doesn't, we've obviously got more downside. You can see I've drawn a support level here around 52. I think that's where we come down to if that breaks. Looking at some of the FAANGs. Let's start with Facebook. It had a nice move on earnings, and it's just been kind of giving that back, right? It tried to break out above that resistance level, and the very next day it just pulled back. In fact, gapped down and pulled back. Does it come down and test the top of this top of the gap here? Hard to say, but it looks like it's pulling back. This is going to be very market dependent, this one. Apple. Apple is Apple's testing this uptrend line. Look at this uptrend line, goes way back here, and it keeps coming and testing it and recovering from these tests, but it really needs to start moving away from here. If we spend too much time in this area, it's going to break down and start testing some of these support levels below. Amazon is just a bit of a disaster. It's just a waterfall here. I don't know where we find support in this. Maybe down here at 2200, probably more likely 2000. Not liking what I'm seeing here in Amazon. Netflix is a disaster. It continues lower. Look at this. But if it can recover, it was trying to draw some support here, and the support goes way back to the past as well. I think, we drew that in from before. If it can recover here and have a nice green day tomorrow, maybe there's hope for Amazon. Otherwise, if it can't get back above this level here, there's more downside coming for Amazon, or not Amazon, sorry, Netflix. Google, another one that needs to hold these levels. If it doesn't hold the level, then there's going to be quite a leg down. Tesla. Tesla's kind of in an area here where it could break down further. But Tesla is likely to find a lot of support. I think if any breakdown in Tesla is going to happen in slow motion. Everybody loves this company so much, and there are so many levels where people find value. You can see where I've got an alert set. That's where I find value in Tesla, is in around 700. Yeah, if the market really starts to fall apart, Tesla could fall apart as well, and maybe come down even to the low of this range. 600 even, maybe a little bit lower. But for it to come down this far, I think the market really needs to be falling apart. Healthcare. Healthcare is trying to hang in. It's one of the slightly better looking sectors. It kind of had a bear flag. Tried to break out the bottom of it, but recovered. Does this start moving back up? I don't know. It's hard to say. It's a little messy. But I am leaning, more bullish on this sector than on most other sectors. However, biotech is awful. It just continues to break down. When it tries to build a brace, it breaks down out of that. And if we zoom out, we can see that we're coming into some really important levels from the past. I mean, we're getting close on the COVID lows here, and the lows from the bear market of 2018, or the crash or bear market, whatever you want to call it, in 2018. These are some important levels that it's coming in on now. Pharmaceuticals. Much the same going on here as with biotech, right? We'd set up, nice important levels here and then broke down below them. So this looks like it may want to continue down lower. Interestingly, one of the best setups that I've seen in a while, Bones in the Discord pointed this out on Thursday, I think it was. If you go back in the stock market chat channel, you don't have to scroll back very far. You'll see where we were talking about this. But kudos to Bones for calling this out, because I really like this setup. I like it because it looks good. It looks like it'll go. But it's also very risk defined. So if we look at the long term on this, it's in a long term uptrend. It had put in a pretty decent base here, sort of a medium term base, and then recently broken out of that. So if we zoom in a little more on this, we can see that when we had that break out of the base, it built another base, it broke out of that, went up, made some new highs. So any of these plays here would have been nice. It did have quite a pullback though, but that pullback came right down to the top of this base, this important resistance level we had been drawn in here, that the market had been watching. Built a little base, broke out to the upsides. Now it's building a base again, or has been building a base again. Got a pretty decent uptrend line going on here. And on Friday, so I was looking at this, and I pointed out that you could put your entry for Friday just above the high of Thursday's candle, and that would have been around 295.5. And sure enough, we broke out of that level. And then, also this little downtrend line, right? So we had, we've got a nice little triangle formed here. So I entered where I said I would. It was in around 295.50 or so is where I got into that once that started to go. And if you look at the intraday, if we look at a 5-minute chart of that, you can see it's really clean, right? This is that level where I entered. I entered on that candle right there. Because it was so clean. The next candle. We had this move up into here. You have that intraday level, and right in around here, just above the high of that candle. That's where I entered, and was quite happy with the price action afterwards. So we had, this is we can see the setup from multiple time frames, right? So if we go back to the daily. You've got this set up here on the daily chart where we're looking for this to break out and have a much longer term breakout. If we look where I've shown the target here at 348, we need to watch out for this pivot at 314. I'll probably take a little bit of a little bit of my position off as we come into this level, and I may add it back in as we break out of that level. But I think you can still get in this. You could look for the kind of setup that we saw here, where we put in a resistance level intraday on this 5-minute chart, and you're seeing a similar kind of thing happen towards the end of the day, right? So you might want to buy a breakout, and you might want to front run it, say when we break through, this level here, because we've got a bit of a double top at the close, right? Maybe you want to buy it there when you break out. Maybe you want to buy it above the high of the day, or maybe you want to wait a little bit. So you could buy it, right about there. Maybe you want to wait until, you break out of here when it really gets some momentum going. But I think that, this is a reasonable entry here, but your risk, the risk isn't as good now as it was, on that initial entry. Because your stop still has to be below this pair of lows right here. Around 287.64 is where I've got my stop. But I think you can still get in this. You just want to go with, smaller size than you would have gone with on Friday. But again, to be clear, this is not investment advice. I'm just, showing this as an example, an educational example for a nice setup. What you do with this is your own business. I'm not suggesting that you jump in this, but I am suggesting if you do that you have a stop and you respect your stop, because in this environment, breakouts are failing, and you can see that even in this stock here that looks so strong, the breakout here did eventually fail and it pulled back quite a bit. Now, this is, you could have made a fair bit of money on this breakout, but you wouldn't want to overstate your welcome in this. And the same may happen here, when this, or if this breaks out. It could roll right back over and come down quickly. So respect those stops. And so that was pretty much the best setup I've seen for a while. Let's move on to REITs. REITs were down this week, not looking terribly healthy, but trying to find some support here, and the support from the past is still holding. So we're seeing a lot of this, right? I mean, we need these levels in these sectors to hold, or we're taking another big leg down. Same goes for Staples. Had a bit of a down week. They are at an important level. This level looks like it's going to hold in Staples. Utilities we talked about earlier, they had an okay week. Interesting stuff going on in utilities here. So we had a nice flag, broke out of the flag, basically fulfilled the flag's target, drew another flag, and then that flag failed. Pulled all the way back, and on a pullback, we kind of expect the apex of that flag, of this pennant, to act as support. And sure enough it did, right? I mean, we did break below it and had a couple closes below, but we've gone back above, and now we seem to be holding above. So this sort of suggests we continue to move to the upside. Now, unfortunately, it's utilities which usually move fairly slow, and they're also a defensive sector, so we're not terribly thrilled when we see defensive sectors acting kind of bullish. Finally, the home builders, they look like they're trying to put a bottom in here. We had a nice little hammer candle after a break lower on Friday, drew a bit of a hammer. Hard to say. It's kind of messy. I think it needs more time, but it looks like the decline in home builders might be over. So that's all I've got for charts for today. And we'll just take a look at the calendar going ahead, if it'll pop up. I don't know why this... Oops, here we go. All right, so coming up, I'm doing a Ticker Talk session on Thursday. And then the following Thursday, we're doing a lesson on dollar cost averaging timing and filtering, and we'll be using the MACD for that. So I hope everybody enjoyed this session. I hope you enjoy the rest of your weekend. And good luck next week. And remember, next week is all about inflation reports. Have a good night, everybody.